Mark Carney today appeared before the Treasury Committee to answer questions about the actions of the central bank, Scottish independence and forex rigging. He said he will appoint a fourth deputy governor focused on financial markets and banking, stating this is important to the FX market and to the integrity of the Bank of England. I'm joined by Jarratt Davis from Smile Global Management to gain his views on some of Carney's comments today. Now, Jarratt, looking at monetary policy, Mark Carney reiterated there was no rush to raise interest rates. But Jarratt, do you think we will see the Bank of England raise rates before the Fed?
I think, yes, very close call, but I think the Fed have got to be a little bit, with the BOE, the UK recovery is kind of taken a little bit by surprise how fast it's happened. With the Fed, they kind of anticipate, they kind of expect that economy to get going in that kind of way. So I think we will see the Bank of England, they want to stay on top of it basically, whereas the Fed have also got their QE program, which is much larger and have a much more global impact than anything the UK are doing. So I think with all that in mind, I think the UK, the Bank of England will probably be the first to start raising rates. The Fed are going to probably be a little bit more cautious.
The sterling weakened against the dollar today and UK government bonds snapped a 5-day decline after Carney ruled out selling the central bank's entire gilt holdings. Now, what do you think about the markets this week, and where do you see the pound at the end of this trading week?
Basically, what's dominating the markets at the moment is this risk on, risk off, because you've got stuff going on in, obviously the stuff with Ukraine, you've got stuff going on with the BOE and obviously, as you mentioned, the gilt holdings and what's going on with that. And then you've also got this whole thing simmering underneath, how are they going to unwind QE, how are they going to raise rates without hurting the economy. I think this week the pound has been pulled down by that kind of speculation, really. There's no real reason why the pound has dropped this week. I think it's just kind of a little bit of risk off. I think if those things worse, so for example, if things escalate in Ukraine, or maybe if the kind of, again, it comes back to this uncertainty, if the markets deem that what the BOE are saying kind of creates a little bit more uncertainty, I think we could see the pound fall a little bit further. But certainly I'll be comfortable with the pound, kind of at 165 on the pound dollar as a base. I think it's kind of dropped into the 166s. It hit 166 this morning. Personally, as a fund, we're buying the pound. We've actually started entering long positions back on, kind of getting to the market long on the pound dollar. If it keeps falling, we'll be entering more positions to get back in. I don't think anything that's happened or anything that's been said so far has kind of changed the market's view on the pound. I think it's still good long position, and I think as it falls, it just gives a better price to get back in, basically. So by the end of the week, there's a good chance the pound could recover back to 167. Or if it keeps falling, I think 165 will definitely be kind of a base, kind of a floor to those moves at this time.
Carney said the central bank had no control over soaring house prices in prime central London. He said this could encourage people in other parts of London and Britain to take out mortgages that they would be unable to afford once interest rates start rising from their historic low. So Jarratt, would you agree with him?
I agree. I think if you talk at the psychology of people, I think if you look back at the financial crisis, the whole thing was caused by subprime mortgages, and effectively what that was is people taking out mortgages they couldn't afford to pay. And what would happen is they would get tempted in with low interest rates for like a few months, and then it would jump, and then at that point they couldn't afford the payments. And I think it's obviously very different, but the same type of mentality will always be there with people. Whatever is around them now, they will view it so that people will be viewing it low interest rates without any kind of foresight into the rates going up. But in reality, the normalisation of interest rates, the normal interest rate generally accepted is around 5%. So we're basically only going to be slowly heading back towards that level. So I definitely think there's people that have bought at the wrong time, they've bought at the highs, they've over-leveraged. I definitely think there'll be an issue with that, yeah, definitely.
And Scotland has the second largest financial services industry in the UK, accounting for about 150,000 jobs. So Jarratt, what did you think about Carney's comments in regard to Scottish independence, and how do you think it will impact the UK economy?
The BOE stance really is kind of what they need to kind of see what's going to happen, how it's going to play out. There's risks, obviously, that you kind of talked about. The risks could go either way, and basically, if things did fall the wrong side of those, those risks that they outline, that they'll be, they're ready to kind of step in and give any kind of advice or guidance that's needed to push things the right way. I think The way we view that is generally fair enough, reasonable comments that he made. In terms of impact on the UK economy, I think the market, the one thing the markets worry about more than anything is uncertainty. And I think ultimately, regardless of what happens, if Scotland go or if Scotland stay, I actually think it will be a big deal overall. I think there's questions like if there's a yes vote, who will pay the debt? Will Scotland still pay its debt? Will it be able to pay its debt? What will it do for currency? Stuff like that. The EU has said it's probably not going to have the euro. The UK is kind of adamant it's not going to have the pound. So that uncertainty is what could be a threat to the markets and the economy as a whole. But, overall, I think it will be fine. And that's only really going to happen in the event of a yes vote, which I actually think is unlikely anyway.
Jarratt, as always, it was a pleasure. Well, viewers, do stay tuned as we have plenty more interviews coming your way.